Welcome out to our halftime report here on a Tuesday. I don't know what version that music was, kind of like a Redux version. I liked it a lot. It sounded a little bit different in my ears. I don't know if that was my system or not, but we are launching here on a Tuesday and we're back for our daily show we call the halftime report, where we go through the markets one step at a time, top-down analysis style. We're going to break down the news, the charts, the information, and we're going to play Queen's Court today with Coach Matt, Coach Mark, and myself. And we do have the Queen here on a Tuesday. Let's bring all these coaches in one at a time. Matt, how are you doing today, sir?
Tim, doing great. Excited to be here with the crew to break down the market activity here on a Queen's Court Tuesday. Great day for traders out there.
Absolutely. Mark, what about you? How you doing today?
It's a fascinating market. I feel like I'm watching scenes of a movie right now on the intraday charts. It's just fascinating little sentiment because I'll get into it later, but like so many trips to the 50 been so quick, right, that you didn't have time to watch. It was like watching a Seinfeld episode. I gotta feel like I'm watching a little movie here.
The pullback is a little bit more orderly than it was over the last few times there, Matt. I mean, in May and June and July, we had a little bit sharper candles every now and then, but here we are at that 50 on a retracement, and we'll talk about that here in a minute. But Matt, do you feel like this is more orderly?
Yeah, I do feel like it's more orderly. I mean, you can see the quick pullbacks here every time we went down to the 50 over the course of the last few patterns here. 2-3 days, quick journey down to the 50, hammer, boom, boom, boom. 2-3 days. 3 days actually, come down, quick journey, boom, boom, boom. Quick journey back up as well. Same thing here, same thing here. Over here, methodical, consolidate, good trigger, upward movement in price. Yeah, I mean, it is a lot more consistent in its downward movement in price, but I don't think that really changes the outlook of the pattern that we have seen develop over the course of the last 6 months in the market. The 50-day moving average in the zone between the rising 20 and the 50 has been a proven buyer's zone. And so I wouldn't be surprised if we see the buyers come back in at these levels. But for me, it always starts. It starts with we like the zone we're in, correct? And we like the zone we're in because in history, i.e. here, let me draw you some lines here. I like the boxes or the circles on this one. 1, 2. That's a little bit of a scary test, but a test nonetheless. 3, 4, 5, 6. Hold on, I'm not done. In the zone, failed break. Hold on, let's see if we can catch one. That's an actual
that
break.
was a different one.
There it is. There it is. There it is.
October last year.
Okay, so we got to go back 11 months after 1, 2, 3, 4, 5, 6, 7, 8 test. 11 months to find the last time the 50 really didn't hold. Really didn't hold. Had a couple scary tests there. One last March, one last June. But again, it has been that buyer zone for a lot of trading participants. And so I do think, number one, you like the zone you're in because, again, this has been a proven buying zone. Number two, the question is, well, what do you need to see before you have confidence to pull the trigger on that next trade, right? That next trade you're looking at. And so, Mike, for example, can I just give a quick example? It is my Queen's Court pick, but can I just give a quick example?
Sure, of course.
Right. This is how I cheat, by the way. If you haven't counted, I detail my Queen's Court pick throughout the entire Tuesday.
I haven't even introduced it, and you're already starting to show your Queen.
Let's bring the Queen in formally first. Emily, do you want to see the example now? Because you are the Queen, so.
Now I want to see it. Of course I want to see it.
All right.
Okay. So you take Apple, and we've been talking about Apple over the course of the last couple of days, and we're talking about that pullback it had on the Epic Games lawsuit that they lost on Friday. You see the quick journey back down. We love the zone, right? You love the zone. And so you start with that. You start with the pattern, you start with the trend, bullish retracement, coming into support. You like the zone you're in. And so it's now just a matter of what do you need to see before you have the confidence to pull the trigger. And so that's where I feel we are in the market. And so from Apple's perspective, I see a nice breakout. I have a higher high. Technically, I have a higher low. It's in the zone of where buyers could theoretically come back in psychologically, fundamentally, technically, where buyers could come back in. Now, the question is, have they came back in yet, though?
They've not on Apple
Not yet.
Yes.
Not yet, right? And the same thing can be said about the entire marketplace right now. Have they came back in yet?
Not yet. No.
No, the only thing that Apple and the market has done right now is they've stopped selling aggressively, right? But
which is the first step.
Yeah, that's the first step, right? You see that big downward movement in price, not necessarily on the market, but coming back to Apple here, you see that big downward movement in price. Obviously, the one-day downward movement in price here, you see that big down, it comes in and it just gets stuck in mud. Well, before that bullish retracement turns into that buyer's opportunity, you got to see the selling subside first. That's step one. You got to see that. And that's where the narrow range candles start to come in, right? And so it's not necessarily volume, because volume's always equal. You have buyers, you have sellers. If you buy something, somebody's got to sell it to you. If you sell something, somebody's got to buy it from you. So you always got those buyers and the sellers, but you want to see the selling subside, and then those buyers come back in and bully pulpit the bears out there and drive that price back up. And that's what gives you the confidence. You like the technicals, you like the zone, you still need to see something happen. And so when I'm looking at the market, and I'll come back to Apple here in just one second, but when I'm looking at the marketplace, I like the zone you're in, right? And by the way, this pattern that established the higher high, I don't think that's any different than what we saw in establishing the nice little trending environment here that happened in August, or the nice little trending environment here that happened in June. I don't think you really saw anything that different from an upward movement in price perspective. The downward movements in price have been a little bit more consistent than the drops in the past, but you still see the same type of slowing momentum as the market is coming back down in between those rising moving averages. It's starting to show its slowing momentum. So it finally comes to that question. You like the zone, but what else do you need to see? And that's where you have to drop this down into an intraday level. And yesterday, Tim, we're sitting here in the halftime report yesterday, and I'm analyzing the market live right after the cash open. And I said, guys, you got some new information here today. You got some new information. Yeah, the volatility of the downside notwithstanding, you got some new information today. And what that information is it's the trigger for the confirmation price point. And that's very important, because before that, all you have is a downward movement in price with lower lows, lower highs. What happens yesterday? That 4480 gets drilled right there. What's happening today? To the penny, that 4480 gets drilled and right back down. Well, what's that telling you? That's telling you that the sellers still have control at 4480. Where are they no longer going to have control? And I said this yesterday as well. You give this a little bit more time, that 200-day moving average on the 30-minute chart inches down, and it makes what could be a nice little breakout scenario at 4480. And so when the market, and by the way, the exact same thing can happen on the downside, guys. That's what creates the neutrality in the short term. And so the same thing can be said about 44.36, 44.35, the exact same thing. But when you're looking at that Apple trade, when you're looking at any bullish trade here today, I'm honestly looking as much as at Apple here, and I'm saying, okay, I love the consolidation over the last couple of days here. I got tight consolidation at 148. I got nice little upward band here at about 150.75 to 151. I got a good trade that I can map out. Get that order in above 151, get that stop loss underneath 148, and let's fly, right? Let's fly. But do you really think Apple's going to confirm above 151 if the market doesn't also pivot back up and confirm above 4480?
Oh, they seem like they would line up together.
They seem like they line up together. And so when I'm looking at this, and when I'm looking at the market, and Apple's obviously a target for many traders out there, but when I'm looking at the market, I like the zone I'm in, but I'm still in the back of my mind saying we haven't confirmed yet. We're still in that we're still in that subtle bullish retracement with confirmation in the marketplace, I do think it gives a lot of traders a lot more confidence to push those chips into the middle and take those slightly aggressive trades like Apple's starting to indicate. But until the market confirms, we just like the zone. I do think confirmation is important here.
Well, we sure do. And by the way, that would be step 6 in scoring a pattern in this pattern called the bullish retracement. We got a signal candle developing, and you just broke that down very nicely. It does make me think of the podcast we just did yesterday, because the current nature of where the market is, Matt, is in a bullish retracement. And you got to have that signal candle develop, give you a clear trigger on the intraday, that kind of stuff. You talked about that in length in the feature of the podcast yesterday, episode 442. Everybody should go out there and listen to this one. Matt, this is an educational podcast. Pitch it just real quick if you can.
Yeah, I mean, the market's going through Tim, you asked me why the bullish retracement. I said, I don't know. I kind of pick topics that are relevant to the market. Market's going through a bullish retracement, and I'm sitting down yesterday saying, oh, what topic should we do for the podcast? And we're like, yeah, let's do a bullish retracement. Let's break down the anatomy of a bullish retracement. So we talked high level about the bullish retracement, went through the different things that we try to look for, and hopefully you guys enjoy it. But it is certainly relevant content for this market this week right now. So definitely check out that podcast. It was released last night. And as always, we do appreciate all those downloads and all those nice reviews. You guys are the best. Love you guys. Go out there and check out the podcast.
Yeah, learn a little bit more about the mechanics behind what we are seeing in the market right now. Definitely a timely podcast. All right, let's keep flashing through the analysis. And by the way, welcome out again. As always, Team Tackle already got the chat up and running. You guys are the best. Give us those thumbs up as we get this content moving forward. Now we're going to break these markets down one step at a time. S&P 500 looks good, I'll tell you that, but it doesn't necessarily paint the entire picture of the market. You broke down all the sectors one at a time here yesterday. Matt, what else are you seeing on the big picture level? NASDAQ, S&P, Dow, those types?
Well, big picture, very simple. It's very simple. This volatility after the open, volatility after the open. We held the ground yesterday. We better hold the ground again. Keep an eye on these levels on the downside. Again, this same analysis that we gave at 44.80, you can look at this short term. We don't want to see a repeat of, because it just, and more than anything, it just throws off the patterns like Apple. That's all it does. Okay. But you fail that, it throws off a lot of the patterns. You hold that, you hold that, you hold that, you hold that. It keeps the patterns really, really consistent. And so one of the reasons why I really like Apple, for example, is the tight consolidation range on the intraday. I like this. Nobody likes this. But I liked what followed it, right? Big downward, stuck in mud, stuck in mud, stuck in mud. Well, if the market breaks down, what do you think Apple does? It breaks down too, and it throws off the quality of the pattern, given the fact that the reason we like it is because of the support zone of around 150. You break down that 50-day moving average, it throws off that quality. And so it's one of those scenarios where you're like, you better hold. We got some good trade setups right now. You better hold. But when you're looking at the rest of the market indexes here, Dow Jones here, big, not big upward, but nice little recovery day. Nope, we're not there yet. A little bit of fake out. Still kind of a stay away here in the Dow Jones. When you're looking at the Russell 2000, same type of theme. Trying to navigate the choppy waters. Had a good hammer candle. Gave it all back today. Still trying to navigate that. Got the nice backstop with the rising 200 behind it. But the longer this takes to confirm, the worse it gets, guys. Simple reality in the Russell. And then when you're looking at the NASDAQ here from an index perspective, not real choppy. Not real choppy. Look at the last couple of days, really hugging that 20-day moving average. Again, you come back down to, and again, you come back down to the intraday levels. Right now, you're looking at 15,500 is ultimate confirmation. Okay, or excuse me, 15,550 is ultimate confirmation to get back up into the range we were last week. But I'm also seeing a little bit of a trigger above 15,500 as well. And so again, the NASDAQ and the S&P, a little bit of a similar analysis. You are seeing a little bit more strength in the NASDAQ in general, but very similar patterns. Russell 2000, very volatile bullish retracement in the short term against the backdrop of longer term neutrality. Not really anything to see there as of right now with that volatility this week. And then when you're looking at the Dow Jones, it's still a stay away in the Dow Jones until we see some type of stability at the bottom ends of those trends.
Let's get these other coaches in here, just get their take on broad market conditions. Mark, how are you seeing these? How are you approaching them right now?
Well, that's a pinch if I ever saw one, right? And then that term pinch I use when it's trapped between two moving averages or a support and a resistance zone. Always a signal of indecisiveness in the short term, right? You get to move up, and Matt broke down the whole thing. But I'm just fascinated. Listen, I've been very light on my own positions over the last 4 or 5 trading sessions, just waiting for the sentiment to play out. Have a plan like on that support, on that breakdown of intraday analysis. It's almost exactly my own. If I get a bullish signal and that intraday on the SPY, I'm going to look into some of my favorite companies, look to add exposure. And if it breaks to the downside, have a protective plan of what I'm going to institute if it breaks to the downside. So, when I say it's like watching a movie, I haven't got a chance to watch a pullback movie all year. They've been so fast. Most of this like back and forth has come at the top of the chart. It hasn't come on a pullback. So it's just, which way is it going to break? I don't know. It doesn't matter. Now, would I bet on the upside? Sure, because that's been the trend, right? But
Great
I'm not going to bet
based on the volatility of movie directors. I like this game.
Like,
this is certainly not a Tarantino pullback.
This is more.
That's certainly not. No. That's more like
That's not Kill Bill. That is not a Kill.
That's not Kill Bill.
You're our movie aficionado. What pullback movie is this?
This one right here?
This one? This is the Wizard of Oz, bro.
It's a marathon. I don't know. Gone with the Wind.
Slow. Gone with the Wind. That's a good one.
Is it the Godfather trilogy?
Yeah,
that's not a pull. That's not a retracement. All right, that's more of a 20% correction. We go 3 different length films. We're getting
people die in that one.
That's
right.
But
it's just I know patience isn't everyone's forte, but like just wait for a signal, right?
Yeah,
just wait for a signal. Let them decide what they want to do. And then once we get confirmation in either direction.
Well, and again, you always got to start with just kind of the technicals behind it. And it always leads into that zone, right? You hear us talk about, we like the zone. Well, you like the zone because of the trend, because of the pattern, because of the consistency in the analysis. We like the zone in the marketplace the same way we like all the every time it comes into a rising moving average in a bullish uptrend. But again, those things have to be confirmed.
Just gotta wait for that little bit of confirmation, right?
Especially with slowing momentum and a lack of theme in the market, it's okay to wait for confirmation here. And I do think 50-day moving average bounces in the face of weakness. I think personally, like front run breakouts, I have nothing to say negative about breakouts. Like,
wait for
you want a
confirmation
front runner breakout, but you wait for confirmation on pullbacks.
Yep,
Because
absolutely.
again, think about it. Breakouts are a strength pattern with momentum behind it. Retracements are a weakness pattern with a lack of momentum behind it. And so it's just a matter of wait for that confirmation on the retracement, especially in this market.
Yeah, that's a great way to think about it as well. I mean, you get the weakness pattern coming down. That's why you get the slowing candles. Then you want to get that confirmation candle to show you the strength coming back up. I love that.
On the bullish retracement, whether you're looking at, the S&P 500 here or an individual stock, who has control over the last week when you really think about it? Who has control of the price when the price is drifting downwards?
I'm going to say
buyers
bears.
Or sellers.
I think it's
not just
profit
bears.
takers.
Bears. I want to say bears, but
that's what I wanted to clarify. I think
sellers,
it's profit
right?
takers.
It's the buyers who are simply selling. They're just selling, right? Well, that's fine, but don't you need to see them buy?
Yeah.
If they're controlling because they are selling, it's okay to wait to see them buy. And that's what confirmation is all about. Whereas when you're dealing with the breakout, like for example, let's take, we were talking about AVGO in recent history. Well, with Broadcom, who has control over the course of the last 3 weeks? It's not the sellers. Every time they've tried to sell, the buyers gobbled it up. It's the buyers. And so you could see some front running scenarios in AVGO, whereas in both tech stocks, Apple, whereas with Apple, I'm like, you got to have confirmation on Apple. AVGO, I think you're in the zone to start front running.
I agree. Emily, I want to get you in here. What's your take on the current market conditions, what we're watching, how are you approaching it?
Go back to the S&P from you, Matt. So yesterday in my lab, we had this discussion and it was a very good discussion. I love the discussion we had, but I was playing that what if, right? And Matt, you drew those wonderful circles kind of showing what the market has done. In previous times, we've had those quick pullbacks, down to the 50. And it's funny how traders have short-term memory. Like we think that that's the norm. Like, yeah, market's supposed to drop for 3 days and then bounce off the 50 and go back up. That's not the norm, but we've made it the norm because it's happened, 4, 5, 6 times now?
Lots of people have identified that pattern and we're all trading it, yes.
And we're all trading it, right? But what if we have that October? What if we have that October where we break the 50 before maybe we see a Santa Claus rally, right? So what we talked about yesterday was, where I'm at in the market right now. I was slightly bullish, but I'm kind of like now at that neutral area of the market where I'm not looking to go, gung ho and start adding exposure to the bullish side of the market. I'm planning on what if we break the 50, what am I going to do? And based on where my portfolio is, it's going to be obviously reducing my delta number, right? So I need to reduce my delta number and get more on a neutral level. So we talked about how to do that by using, put options on SPY and then reduce your overall delta number so that you get to that neutral number that you want to be at. So for me, it's cash flow as usual. Nothing has changed. I'm not getting out and sitting in cash. Everything is still business as usual. However, in the back of my mind, I'm looking at that 50 going, what if, right? And
I love what you said, Em. I absolutely love what you said there, because what you didn't say is I go bearish, because that's not what traders do, right? Traders don't go from, I'm looking for a bullish trade to simultaneously just shorting everything in the world. That's not how it works. You are very methodical in your bias towards your portfolio. You're the market assassin, right? You're methodical in this. You go from, and you handle it very similar to how we handle the rankings at Tackle Train, quite frankly, right? You very rarely see us rank anything from, we've never went from 20 to 20. Like that's just never going to happen, right? I mean, maybe in a flash crash, maybe in that scenario. But for the most part, you go down 5, you go up 5, right? To show shifting characteristics and behaviors and so on and so forth. But you don't take radical scenarios. You don't go from, oh my goodness, I'm looking to buy Apple and gobble up this bullish retracement and this opportunity that the 50-day moving average does represent, to being, I'm selling everything. No, if the 50 doesn't hold, and it might not, right? That's why it's a test. It might not pass. Okay, so let's say it doesn't. What is the protocols that you guys go through when you see a technical scenario that does not confirm? Because for me, I'll go first. For me, I think the step 1 is to write those covered calls if you had anything opened up on from your cash flow side of the equation, right? In those position trades, in those longer term investments. Because for me, it's not a matter of, oh my goodness, the market might go down 10%. For me, it's okay, we might consolidate for the next month and a half before we start getting into Santa Claus season, and I still want to maintain cash flow type scenarios, right? So I think it's step 1, before you even look on the put side, I think you should look on the call side and start and write those covered calls. Step 2 would be to look at your delta relative to your portfolio and determine what your true bias is in your portfolio. Because as a mentor, guys, and I've mentored hundreds of students, I've coached hundreds of students, I've taught thousands and thousands of people around the world. And I'm going to tell you right now, it's buying put options is that thing that gets people interested, but it's not the first thing people should do. It's the second or the third thing people should do. And the reason they do that is they assume their bias in their portfolio is already matching their bias in their head, right? They might say, well, yes, I'm neutral, but through the combination of all of their actions, when they assess what their true delta is versus their bias, it's just off kilter, right? And it's because of those aggressive actions that they take because what they'll look at is all their bullish swing trades are now gone because the market didn't confirm. That's reducing their short-term delta. They then write covered calls against the longer-term investments, which is mitigating that delta. And then if they also go out there and be aggressive on the put side, all of a sudden they wanted a neutral portfolio, but now it's a bearish portfolio, right? And so it needs to be handled subtly over time. And so I do think if we do go down from here and the 50 doesn't give us that nice little buying signal that it has proven to be over the last 6 months, I think step one is to really kind of reassess the cash flow side of it, lock those long-term risk graphs down by writing covered calls, assess the short-term trading environment, and then look at those long-term investments. But I think and this is just my personal opinion, but I think we're a little too, the aggressive, and again, keyword aggressive, the aggressive buying of put options in the face of what I'm seeing in the market, I think we might be a little premature there. Again, it's subtle moves over time, and you never have to have a spring cleaning environment.
Correct. And just add one thing there, because I think you hit it right on the head. I mean, those are what I always personally called natural hedging. You know, you're writing covered calls, you're bringing your delta down, all that kind of stuff. I might look for a couple more bear trades just as a natural hedge as well. You know
again,
what I mean?
Yeah, 100%, 100%, 100%. But again, is that step one?
No, that's
not even step
3.
two.
Yeah.
That's step 3. So step one, you want to lock those risk graphs down on position on long-term investments. And again, this is if we break the dam. Right. If I'm still looking at it as a buyer, guys, that's what I'm looking at this market as.
Yeah, man, in the Sunday night prep class this last week, I talked about if the support level broke. I'm like, all it is preparation. It's not panic.
Oh, it's Boy Scout, Girl Scout stuff. Be prepared.
Like, what am I going to do? Like, for me, the timing of this particular, let's say it breaks down tomorrow, right? Just hypothetically, the timing of this is really nice for someone like me who has I got a lot of out of the money options that maybe I should have closed out already, but very profitable coming into monthly option in September. I close out those profitable puts on a support break, just to reduce, because I've captured most of the profit anyways, right? Maybe I'm trying to push that extra, 15, 20% to get the most of them, but, close out those and then look at covered calls. I mean, there are so many things I do before I buy protection, just in the step-by-step management. But I think what the general theme of what you're saying, you don't do things that are radical. Because that's just not the right answer. You have a plan. What's your order of operation? What's step one for you? For me, it's closing out those low level neck puts that just happen to be expiring on Friday. Good timing on monthly option expirations. Look to sell calls and then reevaluate it as the days, weeks, and months go by, right?
Well, and also, guys, I don't think we overreact to long-term investment portfolios based on daily charts.
No.
No,
those are weekly, monthly assessments. And guys, I'll just give you what I'm looking at long term here. When you look at this weekly chart, that's the backdrop that you're playing with. That's the backdrop. We fail the daily, you still have that backdrop. And so, I don't think. And there's this old saying in trading. I'll repeat it here. You guys have all heard it many, many, many times. There's old traders and there's bull traders, but there are no old bull traders, right? It is this subtlety of actions we take over time that make that make or break short-term and long-term portfolios. So when you're talking about a opportunity, and that's how I see the market right now, as an opportunity as a buyer, I like the pattern. I like the pattern. I like the pattern. I know the game plan if we break back up, correct?
Correct.
Yeah. Oh,
What's the game plan?
You add exposure.
You add exposure. Okay. And should you have your list of stocks you're ready to rock and roll on?
Yeah.
Yep.
Okay. We all have our list of stocks we're ready to rock and roll on with confirmation, right? Now, where is that confirmation? I think it's easy. I really do.
It's really lined up.
Look
nicely.
at that right there. It's 4480, guys.
That 9 is daily moving
averages.
Horizontal.
Yep.
This one's really, it lines up with it
on
all.
The S&P, it's real easy. It is 4480, and if we get a 4480 break, you're breaking the daily 9, you're breaking the daily 20, and you're breaking interday.
You're breaking interday resistance.
Yeah, so
it's
the downside though, Chucky, a little more complicated. right? Because you're not tight against that 50-day moving average. There is a tiny bit of distance there. But on the downside, and again, I wouldn't overreact to any violation here because you do have a backstop of the 50-day moving average. And on the daily chart, the backstop of the 50-day moving average is right there at about 44.24. You also have the 4,400 significant whole number right underneath that. If we do see a little bit of a testing of the dam called the 50-day moving average. So you do have good backstops there. And that's why I think, and not just think, that's why I believe that the proper step, if we do see a violation, is just to take a step back, let those bullish trades, let them marinate a little bit more. Let them marinate a little bit more. Maybe we get a little deeper pullback in Apple, and maybe that brings Netflix down, and maybe it gives us re-triggers on some other things. So we'd have to be in a reassess mode to a certain extent. But I think let me put it like this. If we break down, the concern is simply the amount of time it's going to take for recovery.
Mm-hmm.
I don't have concern on massive downward movement in price here, guys. And so it's more about writing those covered calls if we fail to confirm, locking down those risk graphs in the short term, because we are going through some seasonal conditions that have historically played out to the downside. Talking about September and October, those are two of our worst months when it comes to seasonality. And again, I'll be the first to point out there have been some random scenarios in the history to throw off that seasonality. September 11th, we just had the 20-year anniversary. And by the way, I don't know if you guys have seen the Netflix special, the documentary on 9/11.
I saw it on the front page. I haven't seen it yet, though. I did
Oh
want to sit down and
man,
watch it.
oh man, I started watching that thing at about midnight last night.
Mhm.
I'm a little tired today. It's fascinating.
Yeah.
It's fascinating, and just obviously we all kind of celebrated that with reverence over the weekend as well here. But when you're I forget my point. I'm just thinking about that moment in time now and reliving my experience there. But in terms of this,
random events can create random volatility, like 9/11 did with the markets
and
right
so
after it.
well,
Yes.
not only that, but
Yes.
when did Lehman Brothers go belly up?
Sure, 2007. Yeah.
Okay, and last one, 1987. What
Yeah.
month was it? It was
It's
October.
Yeah.
So you've had some historical really, really, really nasty months in September and October that certainly has thrown off that seasonality to a certain extent, but you can't discount that. It's in the back of our mind. It's a collective market participant thought. We're all very familiar with it. And so sometimes it just feels like we just follow the herd to a certain extent. So
Yeah.
that is in the back of the mind. But for me, it's simply about the amount of time it will take things like Apple to re-trigger, things like Broadcom to re-trigger, things like Taiwan Semiconductor that is fighting a breakout right now, for that to get in a better position to re-trigger. And because of that, I think step one to the downside is simply to lock those risk graphs down on position or long-term investments, because it will take a little bit of time. But I am not, guys, again, I know we've been belaboring this issue. I'm just saying, to the downside, I don't have that big of concern, which means I do think you can accomplish your goals of mitigating risk simply by writing covered calls.
And like any good trader, even if it does do it, we have a plan, right? Covered calls, like you just said, adjust your portfolio delta, all that kind of stuff. I love this conversation here, guys. I think it's very, very helpful. Anything else on broad markets before we move on?
No, if we do break down, we're going to refresh those bear lists.
Yeah, we sure will. There's actually a lot of good bear picks on the option and stock report this
there
week.
are.
Absolutely. A couple things real quick, Matt.
We might just talk a little bit about more of them in the halftime report if we get a little bear talk. But, you're in a buyer zone. You got to talk about buying opportunity in a buyer zone.
I agree. Matt, one thing that did come out this morning that the Fed will be talking about next week is the CPI report, which came in a little bit less than feared, I guess, is the phrase that I read a couple of times here this morning. It came in at 4% on the.
I love people celebrating 4% inflation. I love that. That makes me, just come on, guys. We're celebrating 4% inflation. That's a good thing. Okay.
Do you read anything into one print what came in better?
Oh,
than
man. This reminds me of last month when the CPI report came in at the expectation, and everybody and their dog was like, see, look, everything's transitory because, used cars came down. It's just like, oh my goodness.
No,
What are we doing?
it's
Like,
crazy.
seriously. No, I don't think the the misread on, not the misread, but the miss on the CPI report today is going to change the Fed's thinking.
I don't.
I haven't went through the CPI report in detail like I typically do. But no, the CPI report is not going to change my thinking towards what I feel the Fed's going to do coming in to next week. I don't feel the CPI report's going to, again, what did I say? Like the last 2 weeks, those speeches have already been written, guys.
Yep.
What are we doing? They're not going to pay the speechwriter to come in and redo the speech. Jay Powell's already been in the mirror practicing every morning. He's ready. So no, I don't think it changes the outcome of tapering action.
You know, to test the accuracy of the speeches that have already been written, we might want to write down like the top 21 phrases. I bet we'll hit like most of them. We could play like a bingo card with that. We could just write the speech ourselves. The J Powell inflation.
You know I'm just gonna go copy, paste 6 weeks ago, and then I'm gonna say, look at all this advanced research I did. And that's what the Fed does too. Copy, paste.
We should write a
copy,
Key and
paste.
Peele version of the speech where somebody's doing the Jay Powell speech and someone's saying what he's actually saying. All right.
That is funny. That is funny. In fact, I could be Jay Powell.
All right, do Jay Powell. Let's do one excerpt.
And Tim could just be in the back of my head, just being my hype man.
I got to be blunt with you boys. I don't know if we got Key and Peele's talent.
We don't.
We got
They
the spirit.
can write comedy as good as anybody on the planet. I'm not sure we can just drum up a skit like Key and Peele does it.
Come on,
That
Tim,
might-
give me a inflation is transitory. Give me a Jay Powell.
Well, you know, August CPI report just recently showed that inflation pressures were actually lower for the month, which actually is pointing towards the transitory conversation we've been having for a couple of months. We're not sure that the data is coming in that way, but we're hopeful, we're optimistic that these inflation pressures will subside over time and eventually come back down to our 2% target ranges. How's that?
I have no really idea what I'm doing. You know, we're rolling the dice. We've never been here before. I hope this works out.
He's not bad. It's not bad. By the way, Key and Peele.
Yeah.
Funny.
Key and Peele is
That
hilarious.
when Obama, is it Key or Peele that acts as Obama? I can't. I think it's
Key.
It's Peele. It's Peele.
No, I don't know. Now I got to think through that. I don't know, but they're both great.
Yeah, they're both amazing.
They're both
they
great.
did better than we did, but here, I'll give you one of these guys. Good job.
Golf clap, really? All right, let's move on then. I'm moving on with golf clap.
Tough
Can I
crowd.
chop your head off for that performance?
Yes.
Why do you think I was like, you guys take it on? Like, go.
All right, let's go through the commodity market next here. Crude oil first actually broke out yesterday, popped above that moving average and the $70 handle, got an inside candle here today. Saw an IEA report, Mark, about them expecting future demand to continue to increase. I see those reports at least once or every couple of weeks these days. Crude is weakening intraday here, Matt. What are you seeing?
It's given up the gains it had on the breakout yesterday, but we're coming down. You can see it. I am not eliminating my box. I know it's kind of hard to see the intraday data, but my box is important to me on crude oil. And so when you're looking at this, you're coming down. You gave up the gains you had on the breakout, and see that zone of 70? There's nothing there, right? You come back down. 70, 70, 70. Old breakout channel. It's going to come down, retest that. We give so many Cody specials. It drives me absolutely crazy. Every pullback in the market, coaches of tackle labeled Cody specials. This is a Cody special. Breakout 1 day test. Can we confirm? If we confirm, that gives you the go ahead to start rocking and rolling here. So you're having a test of the old breakout channel, but I'm not too concerned about it. Again, I think energy is the play here. Give you a little bit more trade management techniques in the energy sector. That's kind of given up that little bit. But again, I like the reform here. I really like the reforming up of this pattern. You're testing above the 50. You saw the 50 hold yesterday, come back down today. But again, you see that shifting characteristics here, guys. You got to like that. Might take some time, but I still like the ability above 50 on crude oil quite a bit.
Yeah, and even that red
Not crude
candle,
oil, excuse me, energy.
I was going to say, even that red candle here. I mean, we had such a nice big upward move yesterday. It kind of reset the pattern. Now looking for a breakout for me.
Well, the market's
So,
been selling ever since we started talking, so blame
Oh
us.
yeah, I mean
blame
everything's
Apple.
been selling.
Don't blame crude.
you know?
Blame Apple at this point. I don't even know if it's Apple's fault, but we might have to. They're currently live announcing their iPhones, so we'll see if the markets like them or not. I don't know.
I like Apple, but I really like Apple above 151.
If it triggers, it's got to have that confirmation candle. Absolutely. All right. The rest of the commodity market, real quick here, if we can, Matt. Gold actually was looking good this morning, trying to hold its little support zone. I was watching. I know, Mark, this is something you've been kind of targeting here recently. Matt, chart analysis first. Anything you've seen besides a support test?
Nope.
Yeah, me either. Marky?
Support test. I mean, it's a good support test. You'd like it to continue to hold.
Yeah, still in the box though. Yeah. All right.
Just peg it to 1800 and call it good.
Just peg it.
Seriously.
No, I don't want to do that. I wanted to go where it needs to go, as a matter of
Tim's
fact.
like, yeah, but in a hyperinflationary environment, my gold bars might do okay.
Well, they're there for a different reason.
Yeah, they're there. They're there for the same reason that you have other things there for.
That's right. That's right.
Yep.
Bitcoin next year, by the way, trying to also hold some support. Pretty much ever since that flash crash last Tuesday, Bitcoin has been in this intraday range, just kind of sitting in here, Matt. It could take some time. I got no problem if it takes some time, but it's got to hold support for me. What are you seeing here?
Well, and it's certainly passing that test on the intraday, like we talked about last week when we had the failed breakout and a snapback came up and destroyed that swing trade there. We talked about how it needs to stabilize on the intraday chart. We talked about how the first ding at 44,000 did correlate with some old historical data at 44,000. That got confirmed yesterday at 44,000 after the Walmart Litecoin fiasco. That was both funny and weird at the same time.
Yeah.
Like it's just funny. Who thought, you know what? Let's get Walmart on Litecoin today.
Somebody who owned a lot
that's
of
just funny
Litecoin?
to me for some reason. Like if it was Apple, I'd be like, yeah, it makes sense.
That is
but
a
Walmart,
professional troll.
It
right
is.
there.
It is.
That is a
It
professional
is a
troll.
Professional troll. I thought that was very creative. But after that, again, what happens? Look at the volatility. Look how aggressive that comes down. And all these little data points start to lead to certain conclusions. You got to like the recovery here over the last 24 hours. That's number one. Again, well, that's number two. Number one, pass the test. I mean, you came down. This is a Mike Tyson. You got you in a corner, punching you. You're going down. But the rope saved you. 44,000 is acting as a fairly decent support level. But look at the consistency on the intraday start building here. I really like that. We have not confirmed on the daily. This is still a choppy, nasty water, but we do start to see a little clearer picture as it's starting to build on the daily. Where's it coming into? 47,000. Keep an eye on that 47,000. Old resistance, pop and consolidate, tried to test the support. Keep an eye on 47,000 from an intraday perspective. When you're looking at on a daily chart, I want you to see that 47,500 is right where that 20-day moving average is as well. That's the top end of the ring over here as well. 47 to 47.5, that's your zone of resistance. We break up above that, it is back quick to 50K. But again, starts with the intraday analysis getting more consistent. It's had multiple tests of the 44,000 level. And yesterday's was very important in my opinion because it was volatile. Mm-hmm. And it had one of those things where it was like, wait a second, Walmart isn't accepting Litecoin? Yeah, Walmart's not accepting Litecoin, guys. But again, that type of volatility, that creation of it, is an important test. It passed. Now you're back on that path to recover. I do think you got to like the data over the last 24 hours and look at that zone of resistance. And I think it's pretty clear right now that zone of resistance is between 47,000 and 47,500.
Yeah, and you got to love the fire back on that intraday. I appreciate you breaking that down. That looks pretty good, actually. Looking like it's going to push that resistance zone. Maybe
it's going to give it a try.
Yeah.
It's gonna give it a try. We'll see if it can do it, but it's definitely gonna give it a try.
Yeah, it's giving a run at it. All right, very good. And that's all I got from a market Skyline perspective. By the way, if you're out there and you're watching our show right now, we're going to now move into Stock Talk. Stock Talk is the transition we always make mid-show where we start talking about individual companies in the news. Companies that had earnings reports today.
Very quickly, mm-hmm. If Bitcoin breaks 47.5. Is that a confirmation on a right shoulder break?
Is that a head and shoulders?
I'll just answer for me. Everyone can answer.
Yeah, go ahead, Mark.
I have a add exposure event if it does.
Okay.
Yes, it is.
Like I'm adding exposure. You clear moving averages, you clear short-term resistance levels. For me, it
Okay.
is.
All right, we're on the same page. All right, that's all I want, ST.
Very good. All right, just a
But
couple.
I am waiting until it does.
Patience is a position.
Because I don't have to give up. I mean, think about it. I don't have to give up a lot to get that little bit of confirmation, right?
No, you're still in the part of the process where you're like, oh, my naked puts aren't losing money. I'm happy now. Right? And now that your naked puts are good again, you're like, well, let's go do some more of them.
Let's do some other stuff.
Yeah.
All right.
You know, add exposure could be long delta there, Mark. I know.
Oh, it could.
absolutely,
Absolutely,
100%.
it could.
Yeah, it doesn't have to be a
100%.
naked put. Yeah.
Yeah.
All right, very good. Let's move into stock talk here. Real simple thing. If you're out there, you are watching our show here. Let's get those thumbs up. I got 70 people watching the show live, 24 thumbs up. Let's get that up to at least a 50% mark.
Oh, you want to bring back the Fibonacci?
I do, man.
Likes to. Oh, I
Why
like
not?
what you're
Why not?
doing
Hey,
here.
listen, you get what you
gotta
ask for in
teach 'em.
life a lot of times. That's right.
Yeah.
That's right. Let's get those likes up. Let's get about 10 more people. Hit that thumbs up button. Let's rock and roll here. Maddie, Oracle is the company in the news here today with earnings.
And very quickly, just for those of you who do not know what we just said, standard policy at Tackle Trading is likes have to be between a 38 and a 50% retracement against the viewership.
We do. We have official SOP written for that.
Mhm, we do. I literally had him write it down. That's standard policy. Got to have a Fibonacci retracement level on likes versus viewership.
That's right. I love the data. That is
Kind of kidding, guys. But you
analytical.
get the point. Yeah.
That's funny. All right. Oracle's down here today. Matt, I saw the raw numbers. What did you see here from Oracle?
Raw numbers came in as a little bit of mixed data here, Tim. I got EPS numbers coming in at 103 versus 97, slight beat on EPS numbers. But again, we've had some really good reports out of semiconductors. Oracle comes in, misses on revenue, 9.7 versus 9.8. And right now in this earnings season, and we're going to be coming up to the next earnings season real quickly. Man, it's been such a good break between earnings seasons. But Oracle, I'm going to remind you the same thing I've reminded other companies that missed. You can't miss. That is something you cannot do in this marketplace. You cannot miss. There has been too much money, too much liquidity, too much revenue coming into these companies over the last year to miss. Oracle, you missed, you got punished, and you rightly so. Got to beat.
Not only they miss on cloud revenue, which is what every other company is beating on. And they're also showing, I mean, they're all hitting it. Amazon's hitting it. The big ones are hitting it. So
Microsoft, Apple.
You miss on a hot area of the market like that. I think it's obviously going to be punished a little bit. And Oracle, let's not mince words. I mean, it's up huge this year.
It's a good company.
It's up at the top of the chart.
Yeah,
so
good company.
Gaps it down. Let's see where we go.
That's all it is. That's all it is. It doesn't change the fundamental nature of the company. But again, you miss, you get punished a little bit. That's all this was.
I agree. All right, just a couple of stocks in the news from me then, and then we're going to play a round of Queen's Court here today. Intuit, INTU, they announced a deal to buy MailChimp for about $12 billion in stock and cash. Intuit has been an absolute juggernaut for a very, very long time. They're a revenue producer,
$12 billion for an email servicing delivery company.
And the market didn't even punish them. So you help me unwrap that one a little bit here, because usually when you pay premium for something, you take a little bit of a stock hit. They must like it here. At least the initial reaction is still looking like it's set up for a breakout.
That's a lot of money for a database.
Yeah.
I'd like to see how they're going to generate revenue off emails, but again, I don't have negative things to say about it, but I also don't have positive things. I like the breakout potential here.
Mm-hmm. Yeah, it does still set up for a breakout here. Mark, is this a company you track? Big software giant?
It is not.
Yeah,
it is
not one of your companies. All right, and then last.
I'll tell you right now, I like the Slack acquisition of CRM a hell of a lot more long term than I do the MailChimp acquisition of Intuit.
Well, and I'll be open-minded to what they're doing here, because I really don't know what the plan is. I really haven't seen what that plan is. I know they were in talks for a while there. They got this.
I'm open-minded to it. Like this is the first time I've really kind of seen the news too, so I'm open-minded to it. But again, instinct, I like that CRM, but it's taken CRM a hell of a lot of time, a lot of volatility to try to figure that one out. So I'll just stay with the technical analysis here. This is a fairly decent Number one, it's a good company. Number two, you got a great trend here. Number three, you got a decent trigger above 572. So I do like the technical analysis coming into it. And the market on a little bit of a down day in the market, this news is getting digested by the market really well.
Which is why it's a head scratcher for me. I'm interested to see why that is. I'm going to dig more into this one. All right, last one here for me is real simple. Coinbase. Let's bring this one up here. You say want to stick with the technicals. I want to get a read from you down here on the bottom here, Matt. Coinbase actually got an upgrade here today. It's sitting on support. And Piper Sandler said, we like this company moving forward, upgraded it overweight and jacked up the price target as well. Is this just a neutral chart at this point here, Matt, even with Bitcoin potentially heading higher?
Yeah, I mean, you got Bitcoin firing off today. You got Coinbase upgraded today, and Coinbase is a muted response against that. That's a tiny bit, just a tiny bit, just a little bit of head scratcher there. But I also like Coinbase long term here. I think you're looking at a scenario, quite frankly, that reminds me a little bit of Facebook back in the day. And I'm not going to go back and do detailed analysis on Facebook from 2012, but again, you had a recent IPO that came out, got smacked in the face, got undervalued pretty aggressively. Facebook went from and again, don't quote me on the numbers here, I'm just going off the top of my head, but like around $38, $39 down to $18 to $20, formed a nice little base. And then I remember writing something to our community at the time and said, sometimes the hate goes too far on a company, and the hate, I do believe at this point, went too far on Facebook. And so Coinbase, a little bit similar. Coinbase comes out IPO day, dings 429, but the IPO opening price was right around 380, gets blasted down for 2 consecutive months from 400 all the way down to 220. And then over the course of the next 3-4 months, consolidates, volatile, consolidates, volatile, consolidates, gives you hopes, breaks your heart, consolidates. I kind of like it long term because of that. And so, yeah, I do agree. I do agree with the upgrade, and not technically here, not theme here, but from a long-term perspective in Coinbase, when you're just looking at projecting out, say 3, 4, 5 years, yeah, I do like the zone Coinbase is in, and I do like the neutrality between 208 and really kind of that 280, 300 mark. You obviously can look at 300 as that point from a trader's perspective, or 280 from a trader's perspective, saying, yeah, I'm looking to, make a trade above 280, breaking out of that pivot, or I'm looking to acquire some position trade above 300. But from an investor perspective, very similar to what we like about gold right now, it's not technically great, but you're in the zone where you can start really seeing something a little bit better long term. And so, yeah, I do like Coinbase here long term. It does not have, in terms of that technical analysis, market assassin, swing trading, but that's also not what the upgrade is based on. The upgrade is most likely based on fundamentals and long-term projections. And if you're looking at that from a Coinbase perspective, yeah, you are talking about an overvalued company. You're talking about a recent IPO. You're talking about a growth company that absolutely has to grow. You're talking about a volatile company that can pivot on any type of news. And so it's certainly not for the faint of heart, and it's certainly not for people that are a little scared of losing some money. But for me and for a lot of people at Tackle, I'm willing to bet that a lot of people are looking at Coinbase right now saying, you know what, we didn't want to touch the IPO because we do not touch overvalued IPOs. But the hate has went a little too far. Very similar to what people were saying about Facebook coming into the back half of 2012 and 2013. The hate has went too far. You're starting to look at a little neutrality on that weekly chart. I do like the zone from a longer term perspective. So yeah, I do not disagree with the upgrade here.
Agree with the upgrade, like the long-term analysis.
Again, got to grow. Growth companies got to grow. But yeah, if you're looking long-term and Coinbase is your thing, I don't know what else you want here.
Yeah.
This stock's a winner long-term.
I agree.
I have zero. If
their first position bank broker in the crypto space, guys.
I mean, whatever happens with miners, whatever happens with this, this thing is just so centered. If you believe in Bitcoin, it's hard not to like coin. It's just hard not to like coin.
First position status in an industry is very important. When you look at Tesla, who has first position in Tesla over the last 5 years? Nobody. Tesla does. Okay. Who has first position against Apple? Nobody. nobody in marketing, nobody in consumer products, nobody in discretionary.
Mhm.
What about Microsoft from a cloud or a computing
Software
perspective?
and all of it. Yeah. First
Okay.
position. Yeah.
What about Facebook from a social media perspective?
Yeah.
What about Google from an internet perspective and a search engine perspective?
Dude, they
Well, I don't know if they
dominate.
had first position, but
Okay.
Yahoo sucked.
Well,
So-
Yahoo.
They
Oh, you want to know?
currently
Don't get me started on Yahoo. Yahoo made some really bad mistakes between 1998 and 2002. Some really, really historically bad blunders on that one. But they've had first position since 2000,
Yeah.
right? When you look at Coinbase,
Well, Netflix, Matt, right?
oh, Netflix,
You know,
First position in
classic
industry.
example. Classic
First position in industry.
Everybody's trying to stream now.
okay?
You know,
So Coinbase has first position. They have the brand name. They have brand loyalty. If crypto works, and if crypto's around in 10 years, which I do believe crypto will be around in 10 years, how is Coinbase not a good long-term buy when they have first position on a growth industry that could be revolutionary?
yeah, no, it's easy. It's an easy call for
It's
me.
it's an easy call.
Mhm.
So yeah, like IPO, I was completely out on the IPO. I said it was terrible. It was garbage. Why would you buy an overvalued IPO? Pain goes too far. I think the hate has went a little too far from a trader's perspective. And again, you're never going to find opportunity that's really, really, really clean at the bottom of charts, guys.
Mhm.
That's not how it works. You find clean triggers at the top end of charts. Bottom end of charts, a lot of time get nasty, get volatile, get ugly. That's what you're seeing on Coinbase. It's not for the faint of heart, but I do love the opportunity long term.
Yeah. Love it. I appreciate you breaking that down because I do think there is a tremendous opportunity in crypto, and Coinbase does have first position. Now I got to think about that. Who has first position in all industries? That might not be a bad little exercise.
They should
to
be
go
in your
through.
portfolio.
Yeah, that's what you usually should have them, like cybersecurity, right? You got that Panda. You got those different ones. Yeah.
Absolutely, 100%. You can say the same thing about PanW there. But again, when you look at growth industries, having first position it's important.
Yeah.
You get brand loyalty, brand awareness.
Yeah, I like it. All right, guys, that's all we got from the stock news perspective. We're now going to move into our last segment, which is the Queen's Court. We play this each and every Tuesday. The coach of the Dynasty Investors Trading Lab, and she hosts that trading lab every Monday evening, 8:30 p.m. Eastern. The Queen here, Emily Murray, also from the Women in Trading Group. She gets to judge our picks. We all try to find a good investment, a good stock idea, a good trade idea, whatever it is, present it to the Queen, and hopefully it passes her test so we don't get our heads chopped off. Queen Emily, what you got today? Who you want to go first?
Oh, who did I chop off last week? I think I chopped off Mark last week. So Mark, I'll have
Mark died.
this week. Mark, you're up first.
So I'm up. All right. Listen, while the broad market, I don't have a big theme for you this week. There's some stocks I like, right? Like you like we all like stuff on our radar that if we get a confirmation above that we're all going to give a go. But while the market is working out its intraday sentiment battle, nice bounce off support about 10 minutes ago, intraday support off that. We'll see if that holds. I want to talk about portfolio allocation. So let's talk gold. Give me gold futures real quick. Gold futures real quick. I was really curious, because heading into this week, I always try to map out all the catalysts, and you never know when algos go in overdrive, how like on a CPI report or any of these major reports, you don't know what the action's going to be. I love the bounce off this consolidation support level, which goes back. I mean, this 1780. I mean, how many tests have we had over the last few weeks? I mean, line up that line. I mean, boy, this support test has been battled and battled and battled and battled and battled. Nice little bounce again today. So, that support level continue to hold up. And as long as that support level holds up, I think you got to look at the miners here. And there's a lot of different ways to go. I mean, give me the diversified GDX, which we're talking about. And so I want to have a certain allocation in my portfolio in gold, right? That helps me manage the whole allocation, so Bitcoin goes down or stocks go down or gold. I like having a little diversified portfolio in a lot of different assets. And so if you pull up GDX for me, because I like to do a 1, 2, 3, look at the gold futures. Where are the technicals here? Like the support bounce, gives me confidence to enter in potentially. boy, that has been tested so many times. What is that going on for 3 weeks now? That little level. So if you give me GDX now, we've known since the start of August that gold miners have underperformed. They came down at the start of August when gold came down. Gold's lifted up relatively a little bit higher than the rest of us have in the gold mining space. And we've talked about this support level several times. So I like either a dual entry, and give me GOLD, which is my specific pick. But if you picked GDX here, if you picked GOLD and the CEO of Barrick, one of my favorite individuals, one of my favorite CEOs, just because I find him hilarious. Go Google any interview with the Barrick CEO. He's a character. I just really thoroughly enjoy him. Whether it's GDX, gold, Newmont mining. There's nuances in the pattern here. There are nuances in the pattern, but that whatever new was, that was not a pretty chart, was it?
It's like, when are you going to zero, guys? Yeah. Okay, going back to Newmont though.
Hold on, go back to New. Hold on,
No,
we got to enjoy a moment.
It's
true joy Mark was having there.
Right. Yeah, he saw something almost at zero.
At the bottom.
He's like,
I know. He's like, what is that? What is
Hold
that?
on. You mean I can write a nick and put it 1 cent?
That's right.
I don't. Yeah, well, they probably don't.
I'm just kidding. I was kidding.
Mark was coming back.
Mark's like, yeah, that's deep value.
And so it is. You're going to see a lot of similarities in patterns here. The support level might be a little here, a little there on whether it's gold or GX or Newmont or almost, but the general broad pattern is relatively the same on all of these big, large cap gold companies, which are comprised mostly in GDX. And so pick your favorite. For me, it's GOLD, from a fundamental standpoint, but boy, there's such subtle nuances between it and Newmont. And I don't think you can go wrong if you just wanted to be diversified and go GDX. I think the support level here is worth the go. I like the price response. We don't have any major catalysts from an economic. Algos can always go funny on anything, right? But we don't have any economic reports in the immediate horizon that scare me from an algorithmic standpoint. I think it's worth giving a go at support level. Pick your favorite gold miner, pick the diversified, maybe not cash flow at really aggressive at the start to see if it can get going. Can always cash flow 4 days from now, right? Next week from now, give a chance for support play to bounce here on one of the gold miners. So pretty simple, straightforward for me this week.
Oh, I appreciate it. Thank you very much. Tim, you're up next.
All right, my turn, huh? Newmont, I like that one, Mark. I like the gold analysis that we've had here for a couple of weeks, actually. GDX, Newmont, a lot of those zones looking interesting down here on the bottoms. All right, give me Taiwan Semiconductor if you can. Coach Matt yesterday highlighted the strength in semiconductors. Got me interested in this sector. Everybody's always interested in semiconductors. Some of the most tradable companies in the market are in the semiconductor space. SMH is at the top end of the chart, pushing resistance, looking for a breakout while everything else is kind of fading. We did market analysis talking about the retracements. You've got strength in this industry, which one of the reasons why I'm not overly concerned about the broad markets, by the way. When semiconductors are leading and running, it's hard to see the overall market just completely fall out of favor. But TSM here is one of my favorite semiconductors in the space, Tackle 25 darling. It has wonderful fundamental analysis behind it. There's no question about it. In fact, even last year, in 2020, when everybody's revenues took a hit, not everybody's did. TSM actually had EPS numbers and revenue numbers both go up like 30% year over year. And we're talking about a company that does $48 billion in revenue last year. Just recently, like late August, they even raised the prices of their chips, because there's global demand for them and there's a shortage. Everybody wants TSM's business. Their number one competitor is going to be Intel, trying to build all these foundries in Europe and all that kind of stuff. Let me just say this. I think if you give me a fight between TSM and Intel at this point, I'd take TSM 100 times out of 100. I like the chart here. Love the fundamentals behind the company. Love the industry. Love the space. And I like the trigger up here about 125. There's a couple of candles back in the past that you're going to have to navigate and make a decision on how you would play them there. I like this longer term analysis anyway. So if you can, find an entry point that fits your system, picking it up as a position trade, an investment, this is a company you invest in my opinion. But there's also a trade here if that's all you're looking for, which would be a breakout above
Well,
this consolidation.
specifically, what are you doing though?
Investment for me. I like where it's at. I like where we're heading into the fourth quarter, and I like the strength of semis. If I can get a breakout, that means that the semiconductor industry is also breaking out. I doubt that TSM is going to break above 125 if semis don't break out. That would kind of correspond with what's going on in the market. In my head, strength is coming back. So I like it for a long-term investment, Emily, above 125, as it's taken about 8 months off, caught up with the moving average of the 200 simple moving average.
All righty. Thank you very much. Really like that one. And then Matt, you had talked about Apple, so I don't know what else you want to add to Apple other than just.
I can prep the trade if you want.
You certainly can.
Here, I'll do a little prep action. Apple is my pick. It starts with confirmation above 151. We've talked about that, the importance of that. I do not like front running here in any capacity. I like it confirmed above 151. Stop loss for me, we were looking at the 148.5 level by 148, right where that 50-day moving average. Stop loss has to get underneath the 50-day moving average. That's right at 148. When you're dealing with a stock that has an ATR of Apple of about 287, I think anything between that 25 to 50% of the ATR underneath 148 makes some sense. Apply that personal rule, but I do think stop loss has to be underneath the 50-day moving average. So I like an entry combination on the daily chart above 151, like a stop loss based on your rules according to the step system underneath 148. Question that you really kind of have in this environment is, upon confirmation, where would a legitimate target here be? Because of the volatility to the downside, I do think first target has to be 157. You got to, in bullish retracements, especially very structured, deeper bullish retracements that come into that 50% range, or even perhaps down around the 61% range. I have Apple retracing about 50 to 61%. Again, if you want to look at that, just go ahead, grab your Fibonacci, draw the wave. You can see the percentage drop. You're seeing that 61% there. On deeper retracements, just pro tip here from the architect of the step system, target your previous area of resistance. You got to think deeper retracements, got to run a little bit further to get into that resistance zone. So target one's got to be the top of the previous wave. That's 157. Target two you have right now and again, this massive move in Apple kind of throws it off. I only have one wave. The potential average yield on that one wave is right about 12 points. If we ding at 148, target two would be 160. So I do like and again, looking at volatility being about 28, 29, I do expect volatility to increase as we get into earnings season. So I do like long call here. I like long call above 151, stop loss underneath 148, target 157, target 160. All of it starts with confirmation though. Strategy in terms of long call here, I like pretty aggressive, just simply at the money, 94 days out. That gives you enough time here that you don't have to deal with theta. Again, volatility is right in that 31% range. I expect that to go up, thus helping that call option. And quite frankly, we're looking at a confirmation above 151. I like rocking right at the money here at 150.
Okay, so what I have here is Mark's pick on, either the gold miners or any of the stocks in Barrick or Newmont, kind of like, playing defense a little bit, right? If the market, just kind of continues to do what it does there, and just kind of playing defense and just adding some exposure to that area of the market, but still kind of waiting to see that if that support level holds. The other play I have is from Tim, which is long-term on TSM, but we still have to wait for confirmation to break out on that as well. But I really like where it's been, very, very neutral, sideways for quite some time, and just looking to potentially break out. And I do agree with you that if the market, finds support at 50, doesn't break 50 and continues, to go back up, those semiconductors could also make a run the same way Apple could. And then with Apple, we have a very, very quick hitter swing trade. So I've got a play on defense, a long-term trade, and a swing trade. Which way does the queen want to go?
The queen wants to look at my screen. I'm sorry.
Now, for me, for where the queen is, like I said, I'm kind of just waiting for the market, and all of these, by the way, all require patience. There's nothing that we're clicking the trigger and going on today, right? Everything has to kind of give us confirmation, right? It's all about patience and waiting, right? You gotta love anything on Apple, and I don't swing trade a lot, but every time Matt talks about swing trading, he gets me excited about swing trading. I don't know if you guys feel the same way, but every time he talks about swing trading, I get excited about it. I don't do it as much, but every time he does talk about it, and especially on Apple, I'm like, yeah, I want to bring out the old me and just go buy some straight calls and just pop this sucker and let's go, right? So there is that part of me that, that is obviously itching for that. I love TSM. I have to chop somebody off today. I actually have to. I like them all.
Now, you don't technically have to chop, but I do have a sword and I am the assassin. So I would like to chop. Listen, I'll fall on my sword, but it's Apple on a swing trade. So. And I had the risk graph up.
First of all, my head got chopped off by one of our lovely pro members here, and Linda, because she beat me in fantasy football. So I'm still a little
yeah, but Linda beats a lot of people in fantasy football.
She's pretty good at it.
She's good.
She's really good at fantasy football.
My head is
She's better than us.
She really is.
Off of that. So oh, goodness gracious. All right. Apple's surviving. I'm not chopping you off for Apple. So now it's between TSM and gold. And I already have exposure in gold.
Okay.
I like that TSM setup.
Listen, I like the TSM setup as well. I'm going to be your what's the dude's name in Lord of the Rings that whispers in the king's ear, the bad dude?
I don't know.
You know who I'm talking about?
I don't know his name though. Yeah.
All right, but you know who I'm talking about. That's who I am to Emily. I'm the bad dude whispering in the ear. Emily, it's gold, and GDX is in a really good buy zone long term, right? Value deep on it. TSM is a tackle 25 stock and a darling fundamentally. A darling covered call fundamentally. One of my favorites. You don't have to cut anybody.
That's what I'm saying. I don't want to.
If I had to cut, if I'm giving you some little advice, the long-term analysis on TSM is fantastic. It was missing a little bit of the covered call analysis in that until we break out, because you're still technically stuck in a range. You add on the breakout, you lock that risk graph down on before it does it. It's a technicality.
I know.
It's a technicality. He like Tim.
Who's in charge here?
Like
who's
Tim
in charge here?
Stepped on the line.
Is the queen in charge, or is his executioner in charge?
Instant replay, and the white line was hit just a little bit.
Toe or heel.
It was just the toe.
And he did call me Emily once. But if it's all about exposure and what you're bringing to the queen to add to her portfolio, I already have exposure in gold, right? So for the queen, she already has that. So TSM is something that obviously, hey, I can look to adding that again, waiting on confirmation. It's not something that we're adding today. And then Apple is a quick hitter. Like, obviously we all have, I have exposure to Apple, but I don't mind that long call. It's bringing back the old itch of me and wanting to just go directional stuff. So I don't know.
You can't hire me to kill somebody.
I know you want to.
No, I don't. I don't want to kill somebody. I'm good.
I have exposure. If I'm chopping off just based on what I have exposure on, I'm chopping off Mark because I already have exposure in gold. But other than that, I like them all. I really do like that, that thought process of, if you want to go a little bit defense in the market, certainly can.
What I heard is everybody's walking home today.
I think so.
Yeah.
Maybe a
Yeah.
slight suggestion
Listen.
that next week,
Oh, it's okay. You don't have to kill somebody.
My head is chopped off right now. My head is not back on my shoulders yet because Linda literally chopped me off on Sundays. I'm not even supposed to be talking because I don't even have.
What Linda did was rude. She didn't even care. She's like, I'm not apologizing. I'm gonna stomp on your grave.
Well, we all live another day. That is
very proud of my student. I taught her everything she knows in fantasy football.
What the heck you did?
Linda would school you. What are you talking about? She is a pro.
She is so good at it.
And it was a fun weekend of football, by the way.
No, it wasn't.
Okay, Mark lost to Tim. Linda beat Emily, and Coach Tyler smacked me around a little bit in our nice little tackle fantasy league as well. So you're dealing with a bunch of losers here this weekend from a fantasy football perspective.
I can't. Yeah, I really can't.
Listen, we're better traders than we are fantasy footballers, so there's that.
That's true. All right, let's wrap up the show here, guys. Fun one as always, and a lot going on here. Back on the S&P if we can, as we just get some final thoughts here. Marky, you first. Programming notes. I know we got the coaches show tonight.
Yeah, coaches show tonight. Coach Gino and Greg, the two G's, double G, going to be there on the coaches show tonight. I'm sure they have lots of thoughts. And it's one of these things like whenever like markets are going through whatever, I love multiple input, right? What are they seeing? What are they seeing? What are they seeing? Never hurts. So I like, I'll be there as a fly on the wall for the coaches show tonight. And that is at 8:30 Eastern. Can find that on the events calendar at tackletrading.com.
Very good. Emily, the queen, final thoughts from you.
Final thoughts. This is going to be the third Friday of the month. So Women in Trading webinar on Friday at 8:30 p.m. That's what we got going this week.
Don't miss it, ladies. We'll be reminding you throughout the week. Matt, final thoughts from you, sir.
Definitely check out the Anatomy of the Bullish Retracement podcast that we did yesterday. Tim was the host and walked me through a series of questions that I basically laid out the anatomy of the bullish retracement, talked about how we approach that at Tackle Trading from a step system perspective. And if you are seeking to understand a little bit more about the bullish retracement and technical analysis in general, we also did a bullish breakout podcast a couple months ago, so you can always check that out but in the podcast section of the Trading Justice website. And then the step system. The step system is our flagship swing trading system. Did a webinar last year on it, and I'm going to be doing a webinar very soon on YouTube around this step system as well. So start to refresh that step system mechanics, Team Tackle, because we're going to be rock and rolling with the webinar next week on the step system here on our Tackle Trading YouTube channel. And so I'll be doing a webinar there about the step system. So if you don't have access to it, good time to get access to the step system and start participating in swing trading the same way we do at Tackle Trading, because it is the system that the Scouting Reports is based upon.
Mm-hmm. Yeah, step systems available, by the way, in the store tab on Tackle Trading. Come and join us next week, and come and join us each and every time we go live here on YouTube. We'll be back on the halftime report each and every day throughout the week. Keep you guys updated on what's going on in the marketplace, no question about it. And by the way, one of the best things you can ever do if you are a trader, an aspiring trader, a veteran trader, whatever level of trader you are, come and join our community, the pro membership community, where there's webinars, there's content, daily blogs, daily updates, all kinds of different ways that you can get yourself in the right position to trade, to learn, and succeed as a trader. So 15-day trial link right in the chat.
We have about 12 to 15 pro member webinars we do every single week, application and education based. We have trading labs, guys. We got great core educational on-demands for you. It is a vibrant and amazing community, and come be a part of it with 15-day free trial, no doubt. If you have any questions, please do not hesitate to hit us up at team@tackletrading.com. And until tomorrow, have an absolutely fantastic rest of your day, Team Tackle.
We're out. We'll see you guys tomorrow.